What's up, guys? So very simply, let's just go over the entire stock market. We're going to talk about Apple first and foremost. So Apple was one of the main reasons why the market bounced today. So I was showing how a few days ago Apple was getting very overextended outside of the lower level of the Bollinger Band. And we know that when things open outside of the lower level of the Bollinger Band, it shows extreme overextension. So today we opened well outside of it. And because we opened very far outside of the lower band here, it led us to rally. So Apple's strength, obviously we're up 3% for the day. That had a lot to do with the strength that we saw out of the SPY today. So here's where things get a little bit interesting and a bit more complicated. So it's not as good of a risk reward to be going long here because we are technically not favorably close to any levels of support, and we are approaching a level of resistance, and we also had a green day already. So we have to understand that overall we are in a bearish market environment, right? The only times where it makes sense and it's safe for us to go long is at levels of support like this, all right? So it's very difficult to start going long while we're in the middle of a range. Especially so essentially tomorrow we could have another green day, right? We would end up at levels of resistance. But even here, going long is very risky because we're at a major trendline resistance. So ideally, the only two times that you want to go long during a bear market is near support or on breaks of resistance. So we're not at either of those 2 points yet. But in terms of a bearish market, right? If you do believe that we're going to fall down from these resistance levels and make a newer low, you should have scaled into some of your puts. You should have scaled into some puts today. So what we can take a look at now is the NASDAQ. We can see the NASDAQ also bounced off support clearly. We had a green day. We saw what happened prior when we had green days on the market. And especially as we're getting closer to 276 resistance, things can start being a bit more dicey and they can play with people's emotions. And very similarly to how on the IWM right now, the IWM was very strong early on in the morning. We were led primarily from the strength of the IWM. So we could see that the IWM was the biggest leader today. And it was basically helping lead the SPY. But then Apple helped the SPY as well. But overall, the IWM, you could see that we came and are now retesting this major level of resistance here, which also coincides with the 50% fib level from the March lows. So we have come to a major level of resistance. This is exactly where the IWM was on September 18th, and then we reversed down. So this is a major level of resistance, once again, for the IWM. And if we can close and break above 171.50, that would be a much better bullish sign. But for now, like before we wicked above resistance, closed right below it, and ended up falling lower, this can be a redo of that, basically. So I would be very careful about trying to go long anything close to levels of resistance. And at the moment, the IWM is very close to resistance. So therefore, I wouldn't even want to try to go long on the SPY just yet. I would want to see the IWM close above 171.60, 171.50 with a nice candle. And then that would make me way more comfortable to go long on the SPY or the NASDAQ. All right, because we've already moved so much. But this candle, these candles that we just see today, at the end of the day, these are not reasons to go long. We should have been going long earlier on in the day instead of now, obviously. We also have to take a look at the dollar and the 30-year bonds. We can see that the dollar had a red day, made newer lows from this level of support. And the 30-year bonds, like we saw this morning, are continuing to go higher. But this is a major level of resistance here at the 130 level. So if we can start breaking above these levels of resistance on the 30-year bonds, along with breaking above the levels of resistance on the IWM, that would be the most ideal bullish situation for the overall market for a short-term bounce to 380 potentially, or 378. But again, we have to realize that we're in a bearish market, but October is known to be a green month, but we are already very, very green for the month. So expect some more volatility. I would be very careful about being aggressively long. As we, you could wait to become long as we break above 371, ideally, right? So just be patient. We should have gotten long at the lows, and now the only other time to go long is on breaks of levels of resistance. All right, so I hope you guys enjoyed today's video. Make sure to like, comment, subscribe, do all that good stuff, and I will see you guys tomorrow. Thank you.